News headlines from the United States continue to set the tone for global markets. U.S. stocks closed lower on Tuesday, erasing earlier gains after President Donald Trump said he would freeze stimulus negotiations in Congress after the presidential elections on November 3rd. Just hours before Trump's tweet, Federal Reserve Chair Jerome Powell warned of the risks of passing too little relief. After the tweet, the Dow Jones Industrial Average plummeted as much as 1.5% from intraday highs and finished 1.3% lower. The S&P 500 dipped 1.4% and the Nasdaq Composite 1.6%. On the data front, the U.S. trade deficit climbed almost 6% in August to $67.1 billion, the third widest gap on record versus a $66.7 billion trade gap expected. Meanwhile, hiring and job openings in the private sector fell in August, amid a sign that the economic recovery lost some of its earlier momentum. Stocks in Asia gave back some of their gains in the last 2 days in early Wednesday trading, but the overall dynamics were mixed. Japan's Nikkei closed just marginally lower. Hong Kong's Hang Seng gained over 1%, Australia's S&P ASX 200 added 1.25%, and South Korea's Kospi finished 0.89% higher despite the country reporting 114 new cases of the coronavirus, its first daily jump over 100 in a week. China's Shanghai Composite Index was closed for National Day. European stocks struggled for direction on Wednesday, with weak oil prices weighing on heavily weighted energy companies. The Stoxx Europe 600 index was flat, the German DAX 30 fell 0.2%, and the French CAC 40 slipped 0.1%. The FTSE 100 was also unchanged. Global investors were disappointed after Trump said he would end fiscal stimulus talks until after the November election, but the president also tweeted later that he would be willing to pass several independent stimulus measures, including a new round of stimulus checks. As a result, markets refrained from a broad-based sell-off and saw a mixed day instead. Elsewhere, the UK recorded 14,162 new cases of coronavirus on Wednesday, near the 14,542 from the previous day. In Italy, the case count rose to 3,678 from 2,677. The move above 3,000 was the first since April 24th. U.S. coronavirus cases surpassed 7.5 million on Wednesday, with most states seeing a rise in cases. On the Brexit front, EU's Brexit negotiator Barnier told the European ambassadors that he expected Brexit talks to extend beyond October 15-16 summit. He also asked member states to be flexible on fisheries, with a level playing field remaining a big disagreement, while positive from the UK would be a sign that they will move. Meanwhile, the EU's Michel noted that the EU prefers a deal but not at any cost, and now it's time for the UK to put its cards on the table. Meanwhile, in its September meeting minutes, the Federal Reserve officials said that the economy was recovering faster than expected, but the weakness remained. At the same time, the central bank noted that the absence of further fiscal support would exacerbate economic hardships in the minority and lower-income communities. In a statement, Fed's Williams said that the U.S. economy was starting to recover, but nowhere near what they wanted it to be, with overall data masking health and economic hardships for communities of color and low-income families. He also noted that the Fed's forward guidance allowed it to respond to changes as they happen, while the regulator is not willing to accept very high inflation or persistently high inflation. In currencies, the dollar accelerated its ascent versus the Japanese yen following the Fed's upbeat tone on the economy. The greenback also managed to trim intraday losses against high-yielding counterparts. As a result, the US dollar-Japanese yen exceeded the 106.00 handle for the first time since mid-September and gained over 0.4% on the day, also supported by a recovery in risk sentiment on Wall Street. Elsewhere, oil prices managed to stage modest intraday gains after another volatile day on Wednesday. Brent crude has settled around the $42 handle after an earlier dip below the 20 DMA. The Energy Information Administration reported a crude oil inventory build of 500,000 barrels for the week to October 2nd. In gasoline, the agency reported an inventory decline of 1.4 million barrels, and in distillate fuels, the authority estimated a draw in stocks totaling 1 million barrels. Oil prices rose slightly after the release, with the market also being buoyed by reports that Saudi Arabia has raised its official selling price of its Arab light crude oil sold to Asia for the month of November. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.